Rental income is one thing. However, if you want to make money through real estate investment, particularly a chunk of money, then you need to sell that property at one point of time. I always say that you must have an end in mind while you are beginning. Begin with an end in mind. In this video, I am going to share with you what are the things that you can do before you sell that property. If you do these things, then your selling price would be much more higher. So if you are interested, then let's look into it. Before you want to sell a property, the first thing that you must do is that shop around with your selling agent or the real estate selling agent fees. There are lots of selling agents in Australia, and if you go to everyone, they will say the same thing. I would give you the better price. I will get the maximum amount of money from the market. The first question that you need to ask is that what is their reputation? And you should always be shopping around with multiple selling real estate agents and then find out who is giving you the better service. One, in terms of the rate that the selling agent fees that they are asking. The other one is that what is their reputation, how they can sell, what is their marketing strategy that you need to understand. It is also not be advisable to look for a lower fee. Sometimes an agent can take a little bit more, but their marketing campaign, the way they attract people, will be much more. So it's not only about getting the right selling fees, is also about what is the marketing approach, what do they do in terms of selling is important to understand. Which is why before you sell, before you're planning to sell your property, you should be shop around, you should be look around. There are multiple other real estate agents, and then you would choose the best that you believe you would be able to do. Most people don't do that. Most people just go and approach to one real estate agent and then they just hand over their property to sell only to that real estate agent. But for you, you must actually shop around, at least choose a minimum 3 or 4, and then from their preliminary assessment, you actually give it to one. And in fact, if you tell the other agent also that, hey, you are looking for other selling agents, it's not only you. Before you actually choose, you have just talked to other agents, so they will give you a competitive price. They will talk to you and just to get your property. So it is actually better to go with multiple real estate agents initially, but eventually you need to sort out and shortlist only one. So shop around and then you choose one person would be the first piece of advice I'd like to give. The second thing that you must do before you sell your property is furnishing. You must stage your property before you sell it. Why? Because if you do not stage it, if you just sell the property as is, then it is also not going to be emotional appeal from the buyer's point of view. Because hey, you want to actually get the maximum amount that is possible, the maximum value that is possible for your property. For that, staging the property is an important part. And how do you stage it? Basic furnishing. First of all, if it is an investment property, my suggestion will always be to get rid of the tenant. Make sure that the property is vacant. Once the property is vacant, then you would be able to do some patch up, some fixing, and then furnish it. Furnishing means basic. It looks like where exactly what needs to be done, what exactly the bed will be there, and the mattress and the empty fridge and all sort of things that you need to put into and make that property lucrative, make that property as an emotional appeal for somebody who is actually buying. If there is a lot of clutter, there are a lot of stuff and the tenant is staying, it's not a right place actually to show that property, and the potential buyer, when they'll come, they will not have same kind of vibe, same kind of emotional appeal as they would have if it is a stage property. So you do that calculation. Probably if you have to keep that property vacant for 1 or 2 or 3 months, how much the rent that will be? 4,000-5,000, and plus your furnishing cost, it could be probably $5,000-10,000 more. But that appeal that you are going to generate by staging the property, you should be able to attract between 30, 50, even 100,000 more as compared to the common price that you will be getting while the property is tenanted. So my suggestion will always be furnish your properties according to the needs and create that emotional appeal before you sell the property. The third piece of advice is auction during the bull market and the private sale during the bear market. Why? Because if the market is really hot, it means like it's the seller market. There are less number of properties, which is most of the case right now in Australia. then you should auction your property. Public auction, everybody will be able to see it, and then if you create the kind of an emotional appeal, then somebody is going to bid and you will get the maximum amount. On the other side, if it is a bear market, which means the market is not moving much and it's particularly the sellers, it's better to do this private sale, because in the auction you might not get enough buyer, and remember, during auction you need to spend an extra amount, the auctioneer might take, and the whole campaigning might take a little bit more money. So it's better to do in a private private sale while you are actually selling the property in a bear market. But if it is a bull market, if the market is really keep on going, you must always do that an auction. And most people don't able to decide that, and the simple suggestion is look at what is happening, in the previous last 3-5 sales in that area. See how many buyers are actually coming. If it is more than 10-20 people are coming, 10-20 buyers are prospective buyers, and they are actually competing each other, and you see the market is moving faster, then that time you will be doing the auction. On the other side, if you see the last 3-4-5 sales in that area, mostly the private sale and not many buyers, and it's actually a bear market, it's actually something that not many buyers in this area, then you should not be thinking about auction, because you might unnecessarily waste money and then there will not be any buyers in that auction. The fourth piece of advice is regarding the price. If you are planning to sell a property for, let's say, $850,000, then be prepared to take even $830K. And in that case, if you are actually planning that $850K is your minimum that you would accept, below that you will not accept, then make sure you communicate to your agent that hey, 900 is your price or 880 is your price. Why? Because sooner or later you will see the agent will try to promote, and eventually somebody is going to try to negotiate, and agent is going to put a lot of pressure on you that this is the best offer, take it, particularly if you are doing the private sale. Similarly in auction as well, if your auction reserve is, let's say, 850, be prepared to take sometimes 830, 840, because at the end of the day you have to sell the property. That's your intention, that's your goal. So set your expectation in such a way, and 10, 20,000, 30,000 low you might have to accept. So if you think that your minimum is 850K, communicate with your agent that I am expecting 880K or 900K for that property. Below that I will not accept. Later on that day when the property is going to go to sale, and at that time you might reduce, because in your internal budget or internal selling point is 850, even though the agent is actually pushing you, then you'll be happy. Rather than if your 850K is your minimum, and if you are communicating with your agent, then they might push you further down to 830K or even 820K to accept the offer. And the spur of the moment you will be discussing with the agent, and agent might push you, say this is the best offer, and you might accept it. So unless you are a great negotiator, just make sure that internally you keep some buffer before you actually sell that property. The next point I would like to talk about, be realistic. Often I have seen that people are not very realistic. They see that some other properties in that area got sold for $1 million, and they believe that their property might be sold for $1 million as well. It depends on the property, depends on the location, depends on what kind of features that you have. If it is apple to apple comparison, yes, it is going to go to the same $1 million, probably the one that has gone before. But most of the cases it might be that the property that sold, it has a little bit of bigger block. It can, on the other side, in your case, probably the block size is a little bit less. Maybe the quality of the house is a little bit better as compared to yours. So there are a lot of factors that determine that just because a 3-bedroom, 1-bathroom gets sold for $1 million doesn't mean that yours also will be sold for $1 million. So be realistic, and because your goal is to sell that property, you have already planning to buy something else, or you are already planning to achieve of what you are trying to achieve using this property. So be realistic and make sure that the transaction happens, because if transaction doesn't happen, if the property not gets sold, then all the campaigning and everything that you have done, you have to pay from your pocket, and that's not a good outcome in terms of your investing journey. So next part which I will talk about is the win-win situation. I know way too many people think that selling the property, I want to get the maximum outcome, and yes, we all want that. We want the maximum price, but my experience is that any transactions that you want to do, make sure have a win-win situation. It means the buyer who is actually buying that property, they're happy that they bought with the price. Because if it is not a win-win situation, it actually creates a lot of resentment and it's not a happy thing. And on the other side, you should be happy that you sold that property, and the buyer who bought that should be happy as well that they bought the property. For that, if you have to go little bit here and there, that's fine, because hey, this is not the only property they are going to buy and sell. You might be doing some other transaction. There are so many other things that you will do in life. I think my philosophy is always to have a win-win situation, to think that how I can make this transaction win-win for everyone. Just like if I go and buy my shoes, then the person who is selling is always happy because they want to sell the shoes in that price, and I should be happy as well that the price that I'm, because the product that I'm getting, and that this is something that I want. And that win-win situation makes a happy customers, you get a better review, you get better relationship, and then you see that your life is much more fulfilled, much more energetic, much more happy as compared to win-lose situation or lose-win situation where there is a lot of resentment. So think about that, how you can make it as a win-win situation as part of this transaction. Next point is the calculate tax before with an accountant. If you have already an accountant, you run past with their accountant and say, hey, I'm planning to sell this property, how much tax do I have to pay? So many people, they just sell the property, then they go to that accountant and say, how much do I have to pay tax? On the other side, your investing journey is all about how much tax you have to pay, to calculate beforehand. Based on that, you will take the decision. And if you see that is there any way that you can minimize on that tax, because once the property is sold, there is almost impossible to avoid any kind of tax. You have to pay the tax because the transaction already happened. But before the transaction happens, if you talk to your accountant might suggest you that some of the things that you can do before that way you can minimize your tax legally. So talk to your accountant, get a view of how much amount that you have to pay to the government as a tax as a result of this transaction. Remember, if you are planning to sell that property, that means there must be a reason why you are selling. You must be planning to buy something else, or this property is not making money, or what could be the reason. So your goal is to pay tax. That means you made money, you made profit out of this transaction, out of this investment, which is what your goal should be. You should not be thinking of losing money. You should always make money. I always say people that I would be a happy customer of paying a tax of $1 million. That means I made $3 or $4 million for that particular year. Talk to your accountant, calculate tax before you sell your property. The next point is don't be emotional. If you have been keeping this investment property for long term, 5 years, 7 years, 10 years, whatever be the time, and that time you actually invested a lot of time and energy for that property, it is quite common to become emotional that, oh, this is my property, now it's getting sold, means it will be someone else. But investment property is purely financial reason. You bought that property to go from one place to another place, is from your financial journey, and as a result you need to sell that property at one point of time. If you are too emotional, then probably you will never be able to sell that property. And if you are too emotional, too attached with that property, then even though you talk to your agent and then you are planning to sell the property, but then later on you might backtrack and you'll say, oh, I don't want to sell that property. Don't be emotional. It's a transaction. It's something that you have to do in order to move forward with your life. So keeping that emotion within, because this is just an investment property, it has to be sold one day, and today is the day. Hence you are actually selling the property so you can move forward with your life to do something that you really want to do. For that, you need to keep your emotion at bay. You need to keep your emotion within your principal place of residence or some other properties, but not this one. This one you want to sell that. As a result, your emotions should be kept tight, and don't be too emotional, then you won't be able to sell that property. So these are the points I would like you to think before you plan to sell your property. If you find this video is helpful, then like my video, subscribe my channel, and turn the notification bell on so you get to see more videos like this. Thank you so much for watching, and I'll see you next time. Bye bye.